All right, in this explainer, we're jumping into a complete playbook for a market that, honestly, you might be sleeping on. Airbnb rental arbitrage in Maryland. It's a small state, for sure, but it's hiding some seriously big opportunities. So let's get right into it.
So here's our game plan. First, we're going to uncover why Maryland is such a hidden gem. Then, we'll tackle the maze of local rules. And trust me, it's a maze. After that, it's the 10-step launch plan. We'll crunch the numbers you can actually expect to see and wrap it all up with a final pre-launch checklist to make sure you're ready to go.
Okay, so what is the big deal with Maryland? Well, this state punches way above its weight. Geographically, it's tiny, but it is just packed with an incredible concentration of things that bring people in. You've got Washington, D.C. right on the border, the whole Chesapeake Bay scene, and of course, the beaches over in Ocean City. And this, right here, this gets to the absolute heart of what we're talking about with rental arbitrage. Take a typical one-bedroom apartment in Silver Spring. The long-term rent might be, say, $1,700 a month. But if you list that same place as a short-term rental, you could be looking at anywhere from $3,800 to over $5,000 a month. That huge difference, that spread, that's the entire game.
And this number? This is the engine driving that whole opportunity. $18 billion. That's what tourism brings into Maryland every single year, from over 42 million visitors. Think about it. All those people, whether they're tourists, business travelers, or contractors, they all need a place to stay. And that creates a massive, consistent demand for places just like yours. So, with a big opportunity like this, you know there's going to be a big challenge. And in Maryland, that challenge is the regulations. The rules here are like a patchwork quilt, and it's all handled at the local, city, or county level. That means the rules in Baltimore have pretty much nothing to do with the rules in Ocean City. Figuring out this maze is really the key to winning here.
First, let's just cover the basics, the stuff that applies everywhere in the state. Every single host has to deal with the 6% state sales tax. You're also going to need a state business license, which they call a trader's license. And of course, all that rental income you're making is subject to state income tax. These are the absolute non-negotiables.
And here's where it really starts to get tricky. Just look at the local hotel taxes. Baltimore City tax on a steep 9.5%. Montgomery County is at 7%. And Ocean City is a bit lower at 5%. Then you have places like Montgomery County that say you can only rent out your primary residence, and they even cap the number of nights you can rent. So the main takeaway here is you absolutely have to do your homework on the specific city you want to operate in.
You know, this whole landscape is constantly shifting too. Just recently, Baltimore started cracking down and finding hosts who weren't registered. Anne Arundel County brought in new registration rules. Frederick County just created its very first permit system. Getting compliant from day one isn't just about following the law, it's a real competitive advantage, because all the casual hosts who don't bother will eventually get pushed out.
Okay, now for the fun part, the how-to. This is your practical 10-step plan to get a short-term rental business up and running in Maryland. This will take you right from the initial idea all the way to seeing that revenue come in.
Let's break down the first half. Step 1. Pick your market and your model. You know, arbitrage works great in places like Baltimore and Silver Spring. 2. Do all that local rules research we just talked about. 3. Get your state trader's license. 4. Register for your state tax accounts. And 5. Get your local permits and pass any inspections they throw at you. This is all about building a solid foundation.
And here are the final 5 to get you across the finish line. 6. Secure the right kind of commercial insurance. 7. Get the property ready and furnish it like a pro. 8. List it with amazing photos and, really important, price it dynamically. 9. Build out your operations, especially a reliable cleaning team. And 10. Monitor how you're doing, and once you've got the system down, start looking to expand.
Now let's talk money. What does all this work actually translate to? We've seen the potential, but what can you really expect to make? In a market as diverse as Maryland, the revenue can be all over the place. So let's look at some real examples.
So this table gives you a snapshot of the gross monthly revenue you could be looking at, and this is before expenses. A one-bedroom in Baltimore might pull in around $3,350, but a similar spot in Bethesda could hit over $4,200 because the daily rates are just higher. And look at a bigger three-bedroom place in a seasonal spot like Ocean City that could do over $8,000 in a peak month. The upside is definitely powerful. But remember,
Gross revenue is not profit, and one of your single biggest variable costs is going to be taxes. This chart shows you exactly what that total tax burden looks like. It can range from a pretty manageable 11% in Ocean City all the way up to a really significant 15.5% in Baltimore. You have to factor this into your spreadsheets from day one, or you're going to be in for a surprise.
So let's spotlight a couple of key markets, and we'll start with Baltimore. This city, I think, offers one of the best risk-to-reward ratios out there. Rents are way lower than the DC suburbs, but you still have strong demand from tourists and huge places like Johns Hopkins. That keeps the short-term rental rates high, and it creates a fantastic profit margin for arbitrage.
And here are the numbers to back that up. Your average daily rates, or ADR, are in the 130 to 185 range. Occupancy is really strong, between 65 and 78%. And the best neighborhoods, we're talking Fells Point, Canton, they're super walkable, full of stuff to do, and are just total magnets for visitors.
Now, for a totally different feel, let's look at the DC suburbs like Bethesda and Silver Spring. The key word here is consistency, right? Unlike a seasonal beach town, these areas have steady, year-round demand. It's all driven by government, healthcare, business travel, and that means predictable cash flow, which is absolutely perfect for an arbitrage model.
And the data tells the story. Bethesda, with the huge National Institutes of Health right there, commands average daily rates of 160 to 220. And then you've got Silver Spring, with its amazing metro access, boasting occupancy rates between 70 and 80%. This is exactly what makes these suburbs such an attractive and stable market to be in.
All right, as we start to wrap this up, let's run through a final checklist. These are the absolute critical points that separate the successful, professional hosts from pretty much everyone else trying to do this in Maryland.
First and foremost, please, let's talk about insurance. Your standard renter's policy will not cover you for this kind of business activity, and just relying on something like air cover from the platform is a huge mistake. The bottom line is, you need a dedicated commercial short-term rental policy with at least $1 million in liability coverage. Seriously, this is non-negotiable.
This quote from our research really just says it all, doesn't it? Because Maryland's rules are so complex and they vary so much, the hosts who actually do their homework and operate like a real business have a massive advantage. That knowledge gap doesn't just keep you out of legal trouble, it's literally what makes you more profitable.
So let's recap the bottom line one last time. First, choosing the right market is everything. Second, the regulations are wildly different from town to town, so do your local research. Third, factor in all the taxes so you know your true profit potential. And finally, get your systems down on one property before you even think about scaling up.
So yeah, Maryland's market is a maze. It's complex, but the opportunity is crystal clear for anyone who knows how to navigate it. The potential is absolutely there for the operator who is disciplined and prepared. So the only real question left is, are you ready to make your first move?